Hello folks, this is Raj Sastry from Raj Option Trading. Today is March 31st, 2021. I want to talk about my favorite beaten down small cap biotech stocks. These are stocks with market cap less than $2 billion. So this is something that we can expect some growth as we go forward. These are few companies that we'll be talking about. One is Intercept Pharma. They are into liver disease and curing the liver disease. Next is Karyopharm, and they're into treating the cancer cells. And third one is Epizyme. They do a lot of epigenetic medicines for treating cancer. And we'll have a couple more companies that we'll talk about. So with that overall, the biotechnology market is going to grow with a compounded annual growth of 15.83%. That's a very good compounded growth. So I think most of these companies will take advantage of this addressable market and the growth. And also we want to invest in small cap stocks because they give us outsized opportunity to beat the institutional investors. The big cap stocks like $1 trillion cap stocks, they cannot perform as well as these small cap stocks. So with that, let's look at the list and see what we have and take it from there. So we have list of 25 companies here. The ones in the bold are my favorites. So the way this is organized is we got 1 year return. So this is organized by the top one is 64%, meaning it has beaten down so much, and from then on it's a ascending order. Next one is 61, 57 and whatnot. So this is the 1 year return, 64% negative return in 1 year. So with that, these are my favorites. First is Intercept Pharma, and this company stock is very low price, $23, and they got good sales here or revenue, and good revenue growth in the last 1 year, good quarter over quarter revenue growth, and good institutional leadership, ownership. All these big institutions and mutual fund companies, they are buying into this stock, and good gross margin as you can see here. So I kind of like the companies where there is a sales growth and there is some institutional backing and there is a good gross margin. So those are the criteria that I use. And also I like to see, even though 1 year return is so down, 64% negative, as you look at 6 months, I see improvement here, like 20% improvement. Then I go to 3 months, I see still more improvement. So I like to see the improvement, even though it's beaten down so much for 1 year. But as I go into 6 months, 3 months, 1 month, I want to see improvements. So that's one of the reasons I kind of select some of these stocks and highlight them. And I also like to highlight when there is a huge short interest. So as you can see here, Intercept Pharma, 30% short interest, and all the ones in red here are more than 10% short interest. We got to look at this carefully, make sure there is stock is showing some positive strength and buy them, and expect these shorts to be squeezed out at some point where the share will surge. And same story with the key Karyopharm, $10 stock, nice 1 year sales growth, good quarter over quarter sales growth, and good institutional ownership, high short ratio. And as you look at the performance here, even though 1 year it's negative 47%, as you go into 6 month, 3 month, 1 month, or 10-day, you will see some semblance of improvements. So that's what we are looking for here. So with that, you get the idea, why I highlighted these things. You can look at them in a little more detail and select. I highlighted few of them, but if you like others, feel free to look at them too, because some of these stocks are really beaten down so much. Any good news will end up, these stocks will end up bouncing off of their lows. So with that, let's look at a couple stocks in a little more detail and take it from there. The first is Intercept Pharma. So stock symbol is ICPT. They're into biopharmaceutical. They're a biopharmaceutical company. They do research, development, commercialization for these novel therapies for treating the chronic liver diseases. It's a huge issue in the chronic liver diseases, and this company really tries to treat these things. And the stock price itself is $23.08. Market cap is 762. As you can see from this stock chart here, they have ups and downs. So as you see here, go up, down, up, down. Now for a year or so it's down. I'm sure it will slowly start making its way up as we go forward. So with that, if you see from market cap perspective, it tells the story clearly. So back in 2019 December, it was a $4 billion company. And as you see here, as we go into March, June, September 2020, December 2020, it kind of, market cap kind of constantly reduced. And now they are still a little more down, 762. And there is a good short ratio also. So it kind of tells the story. Company kind of could not get its footing like last 2 years or so, but I think this company has some good indications as we go forward. So if you look at the price of the stock itself, it also tells the same story. $123 back in 2019, now all the way to $23. So it's kind of on a path of a decline path. So with that, sales itself, this is where I see some improvements. If you look at the sales itself, 72 million, 73 million, 77, 80, 83. So sales, they're doing okay. There's an improvement. But market is not yet giving them the credit. So that's one thing we have to watch out for. As these guys do good on sales, eventually stock price will take care of itself. So that's the thesis here. So from a quarter over quarter sales perspective, these guys are doing okay. It's a positive sales quarter over quarter. Right now they're doing 16.50 compared to the quarter over here. So if you compare 72 and 783, that's the improvement there. So it's a positive year over year, the sales growth itself, which is good. They got a good amount of cash, no issue at all. Debt, it's a little higher, but I think it's manageable completely. And from a gross margin itself, there is a nice gross margin. I think they're even it's even expanding a little bit. That's a good thing here. They're nice margin here. From a net margin perspective, they are not there yet. They're not making money. They're still losing money. So many of these companies, they invest so much in their own company, they don't want to show the earnings. That's why it's still negative, because they would rather spend money and grow than showing the earnings and pay tax for it and whatnot. And price to sales ratio is very low. From a valuation perspective, it's not expensive stock at all. So with that, I would think it's good to buy some. Don't buy huge amount. Buy some and watch the company bounce back off this low price and take it from there. Next is Karyopharm Therapeutics (KPTI). It's an oncology-focused pharmaceutical company. They treat cancer and other major diseases. The stock price itself is $10.52. Market cap is 785. So this stock, as you can see, here there is some trend. It's not a steady decline like we saw in Intercept Pharma, but this is kind of up and down. So it was up, came down, up, came down. You can guess, it will slowly make its way up again. Right now it's a little bit down. So I think that's the natural progression for this stock. And if you look at the numbers here from a market cap perspective, this one is 12531413. It's kind of a little bit zigzag. So that's why you got to catch these companies when they're a little bit down, and you can expect a nice bounce back. From a sales perspective, companies are doing very well off late. As you can see here, 18, 18, 34, 21. I think this is probably the COVID related, I'm guessing. Now it's 35. So it's, right now it's getting its groove back, and nice quarter over quarter sales growth. It's nice to see. It's a very good number here, and they do have good amount of cash. Debt is very much manageable. Nice gross margin, no net margin, negative net margin. It's understandable because these companies want to aggressively invest in themselves, and price to sales ratio is not bad at all. From a valuation perspective, still a good buy. So with that, I recommend this stock. It is a $10 stock. You can buy the stock outright and keep it for a long time, and wait for a nice bounce back maybe to 25 level or so, and you can keep it even longer, or you can take some profit. Next, we'll go into Epizyme EPZM. It's a clinical stage biopharmaceutical company. They treat novel, epigenetic medicines for cancer and other diseases. So stock price is $8.71, not expensive at all. Market cap is $886 million. And this stock, as you can see, it's got its up and downs, up, down, down, up, down. So at this point, it's down. I'm sure it started to make uptick here. I'm sure this will bounce back again. And from a market cap perspective, this also, it was high back in 2019, about $2 billion. Now it's $1 billion. And even now, currently, it's $886 million. So it's still down. So this is where some of these companies, they will take some time because they are trying to come up with novel medicines, and it really takes some time. It has to go through multiple testing. They have to get the nod from FDA. It's a process. So that's why you can expect a lot of these zigzags up and downs in these companies. The moment there is a good news on these companies, they will kind of market stock will shoot up. So that's what we are expecting here. And nice market from a sales perspective. I see acceleration here. They were down a little bit during the Corona scare, but now they're kind of coming back here. Nice quarter over quarter sales change here, or revenue growth, and they do have good enough cash. They can survive easily, and some debt, which is not bad at all. Nice gross margin, and company is still not making money. There is no earnings, and that's why it's negative. So these companies heavily invest in themselves. They don't want to show earnings yet. And from a price to sales perspective, from a valuation perspective, this is a little pricey, 69.6. So I think it's manageable. It came down from higher number, but it's now manageable. So I think it's a good stock to add to your portfolio and take it from there. Next is Zogenix, and this is a $19 stock. They're into CNS, central nervous system therapies. This is one of the most common issues in most of the world. Around the central nervous system, people have some issues around there. So from a stock price perspective, $19 stock, and market cap is 1.08 billion. So the stock itself, as you can see here, it has got its up and down. Finally, back in January timeframe, it kind of came down, and now it's trying to kind of settle down and get stabilized. So I'm sure it will make its leg up as it stabilize here. From a market cap perspective, this is a similar story here. As you can see, all the way from 2019 to now, it's a little bit up and down. So it was up $2 billion. Now it's about 1.1 in 1231. Now it's 1.08. So it's a little bit trading pattern, I would think. So that's where if it breaks out from this levels, it can shoot up easily to maybe 30 or so. From a sales perspective, these guys are doing pretty okay. I think there is a sales growth, as you can see here, from 3 million here to 9 million. Good sales growth here, quarter over quarter, and they do have good amount of cash. No issue on cash at all. Debt is very much manageable. Nice gross margin. I would love to see this 95% gross margin. Very nice. And from a price to sales perspective, they're a little pricey right this at this point. 100 plus price to sales ratio. From a valuation perspective, this is a little expensive, but stock being beaten down so much, I think it is good to buy some and keep it for long term. So with that, we'll go into next two stocks here. One is Zymeworks, symbol ZYME. These guys are also into biotherapeutics, and as you can see here, stock price is $31.58. Market cap is 1.46. This one I can see higher highs, and it's a nice looking chart here. Right now they're down a little bit. I can easily see a bounce in this stock. And from a market cap perspective, these guys are showing some strength here. They are kind of increasing, as you can see here. Right now they're down with this dip here. I'm sure they will bounce back pretty easily from these levels. And from a sales perspective, I see a nice acceleration here from 3 to 16, and good quarter over quarter sales growth. A nice amount of cash, no issue on cash here. A little bit lower debt, not too much debt at all, which is good. And gross margin is 0 at this point. I'm sure the situation might improve as we go forward. Net margin is negative, which is understandable. And price to sales ratio is a little high, but it's manageable for these biotech stocks, not too bad. So with that, I recommend this stock also, because the chart looks pretty nice, and now they're in a dip. I'm sure they will bounce back. That will give you a good appreciation in the stock. Last one is molecular templates, MTEM. This is again a clinical stage biopharmaceutical company. They treat cancers and other serious diseases. Stock price is $12.62. Market cap is around 650 million. And this stock also, I could see nice pattern here. It goes up, a little bit down, took a breather, came down. Now it's trying to make its way up. So I could easily see this stock bouncing off of these levels. And from a market cap perspective, they were up back in 2019. Now they're trying to make their way up again slowly, as you can see here, 545, 526, a little bit low. Now it's 650. They're trying to make a comeback here, which is a good thing. And from a quarter over quarter sales, right now it's negative. I think they're comparing with the 1231 here. They had so much $6 million sales here. Now it's 4. So as they go into next quarter, the comparison will become easy, because now we'll be comparing with this 4 here. I think if they can do 6 or 7, it's a nice bounce back from these levels. And they have a lot of cash, no problem with the cash. Gross margin is 0 at this point. They can easily do better as we go forward. And from a price to sales perspective, this stock is not too expensive from a valuation perspective. We could easily buy and take it from there. Clearly, these two stocks have got better looking chart. So I think we could buy some and hope for a good bounce back, because they can easily bounce from these levels by looking at a 3-year chart here. So with that, in summary, these are the list of 25 beaten down small cap biotech stocks. The ones in my favorites are all the ones which are highlighted, bolded up. Those are my favorites. I would probably ask you to look at this once again, see if this makes sense to you. Look for stocks with the positive sales growth and good gross margin, and so look for improving pattern. Even though from a 1-year perspective it's beaten down, look for improvements, as in 6 months, 3 months, 1 month. That will give you some confidence that this stock can really bounce back. So with that, happy investing. Thank you.